All right, it is rule number 4 of portfolio trading. Rule number 4 is trade high volume underlyings. What does that mean? So let's take a look at Tesla. Everybody trades Tesla. Look at the volume here. Volume 77 million. This is considered a heavy day. But if you look down here, the average volume for the 10-day is 100 and almost 117 million. Okay, and let's take a look at how this affects the options. If you take a look at the options chain, one, they have weeklies. See all these dates? They have weekly options on Tesla, and that's because obviously it's high volume. We're halfway through the day. It's 12 o'clock in this. We pushing 80 million in volume. Now let's look at the individual strike prices. Here are the strike prices. Here's the bid and the ask. Here's the volume. And then here's the open interest. Open interest means that they're currently, this option is open and is going to be closed on September 1. So this is the current open interest that has a strike of 247.50 that expires in 3 days. Here's the volume on this particular one. You have volume here of 101. You have volume of 36,000. Volume here is 42,000. These are insane numbers. Okay. What this does, what this volume does is it keeps these bid and asks very tight. It means these are accurate because people are trading back and forth, back and forth, back and forth. You can trust these bids and asks are accurate, meaning that people are getting they're getting fills at this bid and they're getting fills at this ask, and everywhere in between. So these are very accurate. You see these one. This is a 10 point spread, and this is a 5 point spread. Highly accurate. Okay, let's juxtapose this with a low volume stock. Let's look at ACI. ACI is Albertsons, one of the largest grocery store chains in the country, in the U.S. Let's look at the volume here, 700,000 right now. 700,000. The average volume is 2.6 million. And at Tesla, it was 80 million up here, and then it was like 117 million down here. Now, what does that do? You could still get a decent buy and sell on the underlying. So you could trade this one on the underlying. As long as it's over a million, I have no problem trading the underlying. Okay. This one's above that significantly. So you can buy and hold this. It's a good grocery store. It's solid. It's got good price to earnings ratios for a grocery store. It's got a dividend. I mean, you don't have any problem holding this one. It's almost 70% held by institutions. Okay, fine. But let's look at the options on this one. Look at the options on this one. In the next 2 years, they only have 5 options available in 2 years. The next one's September 15th. We have 2 more for this year, September and October. Let's take a look at this one. Here, see the volume? No volume at all. Okay. See the open interest? There's only 2 open interests on the 20 call or the 20 strike. Okay. After 22, which is at the money, you're going to have a little more volume and open interest. Fine. But look at the spread on this. $2 bid versus $5 bid. These aren't accurate at all. You can't trust these because there's no volume at those levels and there's very little open interest. If you put in a bid at 2, it may get triggered and it may never get triggered. You don't know. And on top of that, what if you wanted to sell it? You can buy it, fine, but what if you want to sell it? You think you're getting this 5? No. You may not even get your 2 back within the second because you can't trust these numbers. Okay? Even closer to the money, even at or slightly above the money, that's still a 20-point spread right there with only 6 volume. If you buy that, there's no, you don't know what the price is. You could put in close to the ask and it may get filled, but this I mean, you don't want to mess with stocks that have very low volume. You'll get stuck with the options and not at the premiums that you want. So you have to make sure that your volume is there. You want to see hundreds here in the volume, and you want to see thousands here in the open interest. Okay, let's do one that's maybe slightly KR. Let's try KR. This is Kroger. This is competition for Albertsons. A little more here, about double the options. Uh, about 1.2 million, so decent volume right there. There is some volume here on these calls. There is a little bit of open interest. You could see how tighter the spreads are here. You could probably trade this one okay, but I would want to see way more volume here. Let's look at a low volume but good stock. Kraft Heinz has 2.4 million. They got open interest here, and they got volume, and these spreads are okay. So I do like KHC. I do trade KHC. This is probably the lowest volume stock I'll probably trade. Otherwise, it could get real ugly. You could get stuck with some very bad premium, your very bad prices, and not be able to get out of those positions. So, rule number 4, portfolio of your portfolio rules: trade high volume stocks.